This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello and good afternoon here in London. Happy New Year to all of our listeners around the world. This is episode number 60 of Breaking Banks Europe, and we wish that this year will be a much more enjoyable year than 2020. 2020 was quite a mixed year for fintech. Sure, we had some very big IPOs, but we also had a few neobanks in trouble. But more importantly, I think most of the people around the world had a fairly difficult year, personally and work-wise, even though as an industry we turned out okay in the end. So hopefully this year will be much better for everyone. And we, on behalf of the fintech community, from Breaking Banks Europe, we wish everyone a wonderful 2021. Now, episode 60 is about the invisible layer of embedded finance. And embedded finance is such a big buzzword. When I heard it, personally, my first action was to, and I'm not proud of this, but to really reserve a bunch of domain names. So if you go to Google domains and look for embedded finance dot whatever, they're in my name. And then I also, because I knew this was going to be such an exciting thing after I saw Angela Strange's video on Andreessen Horowitz's podcast. Anyways, that's a little story. With me to talk about this amazing topic today, we have Lars Markhull. Lars, please introduce yourself.
Hi, everybody. Thanks, Ajit, for having me. I'm excited to be part here. My name is Lars. I'm based in Berlin. I work for a banking service company called Weavr.
Great. And with me, I also have Raphael Dana. Raphael, please introduce yourself.
Sure, yes. So I'm Raphael Dana. I'm the co-founder and co-CEO of Gozem. We are a super app dedicated to Africa. And I'm currently, because of COVID, based in Barcelona.
Awesome. Barcelona happens to be my favorite city. Great football, amazing food. And you guys even have that thing called sun, which we rarely see in London. But anyways, so let's get on to it. So embedded finance, right? It's such a big buzzword. I mean, it keeps changing names and avatars. Some days I hear about, banking as a service. Some days I hear about embedded finance. What is it? I mean, what is embedded finance to begin with? Lars, do you want to take this?
Sure. I was just wondering who you're shooting the question at. What is embedded finance? I think what we're seeing in the last couple of years, or maybe even longer, that a lot of companies have an interest to put the financial product, the financial services, very close to their core offering. I think generally when we're looking at the space, at the moment we're seeing this a lot happening in the digital space. I think even when we're looking even further back, there was generally a lot of companies who have seen the advantages of financial products. There is stickiness, there is additional revenue, a lot of things that companies can benefit of when they put it very close to their core offering. So we have seen it in the past happening even without digital services, and now with everything going online, everything going mobile, this is happening as well a lot more in the digital space as well. So basically, embedded finance, where companies who are not really from the financial service space, who are not really core at their really core is not financial products, but they start to integrate in these products for their own benefits.
Profile.
So I think on my side, I would add that I've always seen embedded finance on the fact that some companies are really strong and good at building amazing experience. And from experience, banks, they do okay. I'm not saying they're doing bad. And I think at the end, a lot of companies say, oh, why at the end we don't add this like financial layer ourselves, And thanks to API and thanks to a lot of services and all this new galaxy of fintech around us, where people are just saying like, yeah, we can do it ourselves. And I think that's slowly how it started. And it's true that fintech, if you look at 10 years ago, banks were laughing at all those small companies all around. And now they've built a huge and massive ecosystem, providing API all around. And then you mostly any good company building a product can start to directly create the embedded finance. I think in our case, we're in Africa. It's more an enabler. We need it for our business, and now a lot of people sees it like as a pure utility to activate their own ecosystem.
I see. So back in the day, there was banking and there was commerce, right? And the twain didn't really meet. So I went to Amazon for shopping, and then I used Visa for payments, or I went somewhere else online or offline for shopping. And then there was a finance company that handled my money, or a series of finance companies. And then there was someone else who handled commerce, right? Whether it's online shopping or whatever else. And so what you're saying, I think, and please correct me if I'm putting words in your mouth, is that embedded finance essentially integrates finance into the experience of commerce, right? So, and by which I mean it's so finance becomes embedded in let's say my online shopping, and it's no longer a separate activity. The e-commerce provider can integrate the lending or payments or any other sort of insurance or some other financial service, and that becomes part of my experience or whatever consumer activity that I'm actually participating in. Is that correct?
It is, but that's just for the payment. It's everywhere. In our case, we do that with lending. We do that with investment for our drivers. They can save money. So yeah, I say yes to you, but what you're saying is just one small part. Embedded finance goes all around to insurance product.
Right.
The way.
So I go to Amazon and I buy let's say I buy a big laptop, or I buy a bike, right? A Peloton. And with that, it comes with embedded insurance. So it gives me sort of a discounted life insurance policy because I'm buying Nigel Walsh's favorite bike. Is that the idea, for example?
Yes, and you might pay in 12 installment. Another API is going to give a credit scoring on you and other services. So it's at any level, from lending as well, credit consumption.
And just that, focusing here specifically on the e-commerce angle, obviously we can look in a lot of other industries as well, right? Industry, the e-commerce one you described very well, makes a lot of sense. But for example, also looking at everything that happens around like future of work, early wage access, employee benefits, there are a lot of other things, a lot of other areas as well where we're embedding not just banking, but even insurance and other kind of things makes a lot of sense.
Right, this is going to be fascinating. Can you give me some examples of those user journeys so that it's a little bit clearer to our listeners?
Especially looking at the future of work area, we're seeing a lot of making company spending. I think we can differentiate in two things for the future of work. One side on the company side, when the company is spending money. I think specifically now with COVID and everything going online, employees need more autonomy when spending and more maybe control over their own budgets. So obviously the services, the tools that are using today to enable them to make certain payments, maybe to issue them an own debit card, to issue them certain kind of payment features of payment methods in order to make a certain purchase. But then on the other hand, on the employee side, the early wage access or the employee benefits, something services or tools for the employees to either access their wage early and then maybe get it available directly on a Visa or MasterCard and go spend that money immediately for the important purchase they have to make, or on the employee benefits in a way of leveraging tax benefits for spendings on certain areas, and everything is controlled through this for a debit card as well, for example.
Great. And Raphael, what sort of user journeys or user experiences have you been enabling? Some examples?
So I think in our case, we're in Africa, and that's really interesting because you were talking about credit card. Lars was talking about credit card, and we're really far away from this in our market, and we have a massive network of mobile money operator. And in our specific case, when we started our ride-hailing business that have extended to a super app, is at the beginning, we needed to embed finance to unlock some potential problems. Like our driver didn't have smartphone. So we had to sell smartphone, finance them, and get a leasing system and they could repay. For the repayment, we needed a wallet. So our wallet is still closed, but we're anytime soon, we're going to have a license in partnership with 2 banks. And then we're collecting the money every day there. We've connected with API with all the mobile money operator, so you can top up, you can withdraw directly the money. And now we've just put in place our vehicle financing solution, where we've built our own credit scoring, our own KYC system. So we have a GPS tracking. So I would say that's not embedded finance, but that's a utility we're using. And we collect the money on the wallet, and we manage the default. So with all this full servicing, we're partnering with banks, but at the end, the only thing that what the bank is doing is they're giving the balance sheet. We're providing all the information, all the data, and all the servicing. And I mean, to conclude a bit on this is, at the end, I think many banks and many insurance companies are going to decide to become either a utility company, or they're going to decide to go on the field and fight with the experienced tech company building this. And I really think it's going to be two levels of banks. We're going to say, what do we do? Do we go and compete with all those startups, or do we just stay in the back and we want to be a custody and we just keep the money and we rent the license? And that this is a bit the way at least personally, I see how the market is going to evolve.
Right. So, I mean, the first time I really got excited about the topic was when I saw the Angela Strange video by Andreessen Horowitz, where Angela, a partner at Andreessen, talks about embedded finance and so on and so forth. So I felt that it was a great story, and there lots of great ideas came out of that. But there was a little bit of this, Silicon Valley mind on it, right? So where you sort of having been born and brought up in financial industry, I tend to worry a lot about regulation. I tend to worry a lot about consumer protection and those types of, my soul has gone a little bit dark having worked in risk and compliance. So when you are in Silicon Valley, you don't worry about any of that. You just get excited about the tech. You really worry about great consumer experiences. And then you talk about how Lyft drivers are using their app as their primary bank account, with some bank essentially providing the banking services, taking care of the licenses, and so on and so forth in the back end. And the tech company just enables some really nice context-driven consumer experiences. And even before Angela talked about it, Brett King had been talking about context-driven, analytics-oriented banking for a very long time in Breaking Banks and Banks 4.0. So now all that is coming real. But I have a few questions. First of all, who bears the liability? Sure. So the bank has the licenses, whether it's Solaris or someone else, right, or you guys, and then and then the consumer gets a really nice consumer experience delivered by Amazon or somebody else. Who bears the liability for conduct risk? I mean, if something goes wrong, there is a PPI incident. Is it Amazon's problem or is it the bank's problem?
I mean, this is specific. I mean, of course, in this specific use case, it then depends on the exact arrangement of the contract. I mean, I was looking at this from a very, very high level, and maybe commenting on the talk or video from Angela Strange that you're referring to. I think this quote, like every company will be a fintech company.
That's the one.
Has gone around a lot, and in a way, I kind of agree with you as well. I mean, it has been used a lot, and maybe sometimes like even overused. However, I think we have described already the benefits. I think the trend is very, very obvious, and we're going in that direction. Will it really be every company? Maybe not like really every, but I think there are benefits for a lot of companies to actually do that. And I think one of the things we always have to deal with and have to be very, very careful is everything around risk, compliance, and so on. I think as soon as there are companies trying to find ways to trying to find a shortcut, that will definitely not work out and not really beneficial for anybody. So I even see in the way of like everybody becoming a fintech is in a way to even ensure greater security or greater data privacy, because when you're actually having provider who specifically focus on that, obviously these companies might be able to do a better job than somebody who's trying to do everything, right? So
there's that, right? Because obviously somebody who owns the consumer experience or is close to the consumer experience has, first of all, a lot of context, right? So what the customer is trying to do when they're trying to do something, and the bank has no idea. I get that. Now, they also have better analytics and generally better technology, right? And especially fintechs, or e-commerce companies. And that's why I love the e-commerce examples, or Lyft or whoever, right? So better analytics, better context. Sure, you can deliver amazing consumer experiences. I think that the aspect of liability still remains. And I don't know, Raphael, what you've seen.
But I think there's a use case was really interesting. If I need to make a parallel, I mean, I have a bit more white hair than Lars. So I did my first company in 95, 1.0 era. And at that time, we all thought that the telcos would take over the world. We're looking at Vodafone 95 and Orange and all those big guys, AT&T. And we said, okay, the guys, they own the telcos. The internet is coming. They're going to take care of it. And as a result, they didn't. That's a reality. It's the WhatsApp, it's the Google, it's the Amazon, it's the Apple, it's all those companies, and it's the Spotify, I mean, name it. All those hundreds of companies that completely took over. Basically, they became utility company. They're still a really huge company. They still make a lot of money. I think they still innovate, but they're more in the hardware and they have other things that they're fixing. But this is the reality. When you're using WhatsApp, who's liable if you cannot connect? Is it Vodafone, or is it? I think at the end it doesn't really matter. That's a question of terms and conditions, a bit as Lars is saying, on when you accept and where you are. And at the end, I think in the bank is going to be the same thing, that the bank is going to guarantee that the money is in deposit with them, okay? And if you've not been able to process your payment or something, that's going to be part of the experience or the tech not working. But I think the parallel of the telcos and the tech giant, we can do the same on the fintech. And I think we see the same attitude where really at the beginning, telcos said those companies have no chance, and they completely took over. I think the lesson is that experience always wins. That's my take.
I agree. I think that's really well put, right? So we saw this with Apple, with the App Store, and we saw the telcos connecting at the back end and the power dynamic changing there. So that brings us to a different question, right? So when I was in telecom was king, and then Apple came along and it was over. Now telecom is just utility, and Apple is and Google are kings. Now, what does this mean for banking? As a bank, should I not be really? I mean, on one hand, I'm getting really nice distribution, more context, experiences for contextual experience of consumers, but at the same time, I'm losing control or any sort of information about consumer experience. As a bank, if I'm the dump pipes and plumbing with all the liabilities and licenses, how do I navigate this this scenario where I'm losing control of the customer relationship through embedded finance? I mean, is that assumption even valid?
I mean, like personally, I think from a high-level answer, I would say at the moment we are like mostly in a transition period from like the let's say the old world into the new world. I think in the old world the banks felt quite comfortable in that area. They were competing with other banks. They exactly knew who was there and how things work. They specifically knew very well that their competitors have the same challenges and hurdles and obstacles. So they knew very well how to compete with that. Now with not just embedded banking, but with, I think, 10 other trends that are happening at the moment, everybody or every player has to look a lot more to see where their USP is, what they really should focus on. And as you said, like I did with the embedded finance at the end of it, there are some players who are in the background, who are some players in the front end. I would be guessing like it's hard to say like put all the banks into like one bucket and all of them should be go in one direction or the other. There might be probably some banks who might be able to even have a role in the front end, and there might be other banks who might be based on their skills of the team of the organization and so on, who might be better suited to go in the background on the back end and be a utility provider. I mean, at the end of it, I think when you're looking at all these fintech Twitter discussions, also an infrastructure company and B2B player can be quite an interesting area. That doesn't have to be. I mean, of course, it's painful to give up the customer context, but if you're ruling the game on the other side, this could be a lot more interesting as well.
Yeah. Yeah, Raphael, what are you seeing in the world of banks? I mean, should they be worried?
So, yes and no. It depends if you're going to do the right thing or not. But if I would be a CEO of a bank today, I think I would do three things. I would cut the pie in three pieces. One, I wouldn't let the business of just being a bank, being a deposit, and because nobody wants to do that part. That's the really bad part. There's no point. So the bank, the compliance, the deposit, they have to do it. But I think on this side, what is interesting is to say we want to work with all the best tech startups and create really like an API system and a full ecosystem. We're going to say to people, what do you need? This is the best way to learn. If all the startups come and say, we want to use your license, we want to use your platform, I need this, I would reply, I would just like answer to them. That's one part. Second, I would just ask the people of my bank to become a startup and to use the same tool and these other people. And I think third, I would invest in the best company using my platform. And I think that's the best way you can evolve because you have three different types of business. And as I said, we're all using API, we're all interconnected. One is my bank is becoming an experience. In the back, I really like this infrastructure and compliance and deposit. And third, that's what they all do now. You start investing massively in the right companies that you want to have in your portfolio.
No, I think that's a really good way to put it. Now, I mean, being in fintech, we are in the hazardous business of predicting the future, right? And we have to do it with great confidence. Otherwise, nobody will listen to us. So whether we are on Twitter or podcast, we have to say things with a lot of confidence. So I'm going to do that, right? Now, I see 2 or 3 different trends here. One is, and in fintech, we get really excited about buzzwords. It's just what we do, part of what we do. Obviously, we do also build a lot of stuff. So APIs, right? On the one hand, we're talking about APIs. Everyone has been really excited about the regulation that supports, API-oriented banking, whether it's PSD2 or open banking and so on. But we haven't really seen, sure, there have been some very successful startups like Plaid come around, but we haven't really seen a lot of this support for open banking and other API-oriented platforms from European banks, and we are in Europe. So what's going on there? I mean, if embedded finance is such a big opportunity for banks, why are we not really, capitalizing as bank? I mean, why are banks not capitalizing on open banking?
So I think on this one, sorry, Lars, but it's just I'm just following on what I was just saying before. What you're exactly explaining, and what I was saying before is what most banks should do, and they don't. Because they're all conservative and say, oh, I'm not going to leave my platform. I'm not going to open up those fintech. They're going to take so much time to get to where we are. But the only thing banks are doing is they're buying time. It's the only thing they're buying.
Mm-hmm, mm-hmm. And there is some strategic logic to that, right? So if see, as a bank, forward integrating into commerce or anything else, or Weavr or anything is really, really hard, right? You're not in that business. You're in the asset liability management business. You manage risk. It's great. And you manage cash, liquidity, right? Now, so you know how to do those things. You don't necessarily know how to run any operational business outside of finance. And you don't want to get into the business of buying, e-commerce sites or shops or something else, because you just don't know how to do it. And it's not what you do, right? So forward integrating from banking into commerce or anything else, whether it's Uber or Lyft or anything, is really hard. Backward integrating into banking may actually not be that hard, right? I mean, so we talk about Google becoming a bank or Apple becoming a bank, and there are some signs that, sure, it's a terrible industry in terms of profitability. And if you're a Silicon Valley firm, you don't want to be a bank because you have to deal with all the regulation. So you better offset it to someone else and let a bank take care of all of the back-end liabilities and risk and so on, right? To which they are great at. So as a bank, I mean, I don't see a lot of opportunity. I mean, where is the opportunity side of this? If I'm a bank and you have to sell to me and say, guys, come on, provide these APIs, I'm Barclays, participate in embedded finance. What's your pitch?
Just one thing important here to add. I mean, you mentioned already like Google and Apple. I mean, it's important here to emphasize as well that those companies are also built their products and services, the financial services on top of other banks, partnering with, Apple partnering with Goldman Sachs, Google partnering with a couple of banks. I think I'm also not, there's probably there's a lot of fintech Twitter talk about this topic as well. It's probably not really anticipated that any of these players will go for like a full bank license. Obviously, they have a few licenses in a few areas for certain benefits, but specifically for holding funds and maybe even doing lending, these kind of things, I would be making a guess here as well and saying this is something they probably don't want to get into and rather work with companies who have these licenses. For the biggest reason, I would be assuming to stick away for fulfilling these the regulatory requirements in order to stay fast and lean and not get slowed down by these kind of specific regulations.
Okay, that's helpful. Raphael, any thoughts on that?
No.
What's the pitch for banks?
But I think the overall game changer is data. And I think that's the point. It's talking about. We have so much more data, and even us, what we're doing in Africa, it's not even comparable if you compare to Europe or US, because in many cases there was no existing data, and with data we have so much more control. And it's true that the risk is linked to what are you doing? You want to understand, do you have the data and do you have the information? So when you don't have information, your risk mitigation is completely different. And 20 years ago, banking, that was the case. You would lend some money to some people, and the banker would come to your house, see where you live, more or less, and talk to your neighbor and say, this guy. And now the banker doesn't even want to see you, He has a ton of data on you. And I think already that's the case for all those startups. This is why I think the risk parameter, when we talk about the compliance and the KYC and all of this, it's an old problem who's slowly disappearing without people realizing that it's disappearing slowly. And I think in 10 years from now, it will be, let's say, it will be embedded compliance. Maybe in 10 years, the podcast will be like, it doesn't exist.
Embedded podcast.
We have already so much data. Why care about compliance or KYC? You have nowhere to go. We know everything about you.
Right. I was planning to sell you some insurance for appearing on this podcast, but we'll do that after the break. We'll come back in a couple of minutes after the break.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
I invite all the audience of Breaking Banks Europe to follow this new series named Breaking Carbon. You can subscribe for free on your preferred podcast platform and receive timely updates and direct access to all our episodes. See you next week.
Welcome to episode 60. We're coming right back from the break after a really sparkling conversation about one of the hottest topics in fintech, namely embedded finance. So again, continuing from the previous thread. So Lars and Raphael, I work in crypto, right? And in crypto, we have a slightly different hypothesis from what you're describing. So we agree that the future of finance is embedded, right? But the way we see the infrastructure layer coming is in the form of networked protocols, right? So where you sort of the bank disappears, there is basically algorithms taking care of everything. So there is this internet-oriented infrastructure. At least that's my dream, right? That's what I'm working on. And then you open up APIs to all of this internet-based algorithmic finance, which we call decentralized finance, right? It's part of the internet. It's written into the protocols. It's written into the software and the algorithms. There isn't a bank. So, and sure, there'll be some form of, there'll be people who will provide interactions with these protocols and take some legal liability for essentially providing, and provide compliance services and so on. But all of these things more and more and more become embedded into the algorithms that are part of the infrastructure, like, SS7 or other protocols take care of my telephony today. And then finance becomes a set of protocols that are networked on the internet. And then the only thing that everybody is doing is opening up API connections. So that's kind of, I'm working on the backend infrastructure for this along with a lot of other people. Now, is that a dream too far? How do you see this, the back end of embedded finance? Do we still need banks?
I mean, here the right question is probably like, what is a bank? I mean, at the end of it,
it's just an algorithm.
It's algorithm is first of all licensed provider by a regulator. So I think we completely agree that the way a bank works or the way the bank will behave and all this is completely changing. But at the end of it, I think or I believe in that context, it needs to be the licensed party, the entity, which is a bank, and that has to be somewhere in there. I mean, yeah, of course. I mean, I'm not a crypto expert either, neither in real life nor on Twitter. However, I do see there's certain benefits and possibilities even for embedded finance. But honestly, in the daily work I'm doing, it's not been so much of daily relevance than other topics
yet. Right. Okay.
So I think on my side, I really believe in market efficiency. So I think that at the end, if we at some point, so here I'm reading in the theory that if we have an efficient, secure, decentralized network that can replace a bank, sure it will. I don't see any reason, because it's going to be much cheaper and it's going to be fully independent. We've seen already the small bubble we got in the crypto with the ICOs and everything, and we got stopped quickly because it was a bit of scam for sure. But that was not the first reason. The first reason was like all the regulation, and we've seen like all the central bank and the SEC all around the world, all those guys, they wanted just to shut it down. And we know that crypto is the disruptor of the financial market. But it's not replacing the experience. I think the crypto and a lot of protocols we're talking about, I completely agree on the fact that it's going to be more replacing all the backbone and all the back end. Yes, and some crypto company will build amazing experience. It's going to be who's another discussion. But at the end, I think I would say the traditional bank will be competing with crypto, and the reality is that, as usual, the most efficient and the most reliable in the long term will win. As simple as it.
Right. I will try and put all of that into algorithms over a period of time. That's the tech dream. Anyway, so Lars at Weavr, you gave others the opportunity to embed financial services. The space has become saturated recently and even more competitive given larger businesses like Stripe's treasury and capital announcement. How do businesses like yours sort of come out on top as the best tech providers? How do you compete in this excessively well-funded environment?
Sure. Yeah, I mean, you can imagine that especially the Stripe's treasury announcement has made huge waves in the whole fintech community. We at Weavr see, or we have seen this as a huge support in a way, like in the direction we're going. I think overall, Stripe Treasury is showing in what direction embedded banking should go, but there are also a lot of limitations around these offering. I mean, if you look at the number of providers in not just in the whole world, but also in individual countries, there's a lot of room, a lot of space for different players. I think for us at Weavr, I mean, we are focusing really on the three advantages we're providing, which is accessibility, which means like really low cost, easy to integrate, easy to go live, really speed to market. Because I mean, at the end of it, we're focusing on the whole trend around embedded finance, not to build the next N26 or Monzo, but integrate financial products into existing businesses. So of course here, speed can be really crucial. Overall, we also enable banks to integrate their offerings into our platform, so we can leverage banks who want to experience the whole embedded finance trend and maybe have some benefits around that. We enable them as well to be part of the whole offering.
Yeah, I'm glad you mentioned Revolut, because there was some noise about Revolut trying to move into the banking as a service arena. I don't know if they've actually done anything since.
I mean, so far I've not heard anything, but overall, I mean, again, look at Stripe Treasury, look at like how Weavr is built. At the end of it, you can build banking as a service in a way that you really focus on the tech piece and let the license or the regulation part do a bank, for example, who is plugged into the platform. That's exactly how we are designed, and ideally we could also integrate a company like Revolut or other companies. There might be also other players who are adding banking as a service to their, let's say, new banking offering as well.
So, and Raphael, who are your biggest customers, if you're at liberty to reveal, in terms of embedded consumers of like businesses that are actually utilizing the services you provide?
Sure. So, I mean, in our case, there's no secret. We're a B2C service. So we're a super app. Our role model, our company like Grab or Gojek in Southeast Asia. I've been in Singapore for 8 years before, so we've been fully inspired by this specific model. And it's true that inside a super app, we're providing transportation and we're providing delivery services and other services. But it's true that we need definitely embedded finance. And this is the power of the super app. Obviously, WeChat from Tencent is the biggest super app in the world and known for this. And same for Grab and Gojek. And it goes either from the consumer perspective, because we have a wallet and we can do payment and different other things. But it goes also from a merchant and a driver. We call it champion in our company. And for our champions, because we need to provide lending, we need to provide them also a wallet, and we need to provide them also a value-added experience. And at the end, in our specific case, what is really interesting is that most of people using our wallet and using our app didn't have a bank account before. And this is where it's completely different. And because if you ask them the question why, they would tell you what for. And they're right. They're in a cash economy, you pay everything in cash. A bank account costs a lot of money, you have a lot of fees, it's really complicated to open, and there's no value. Nobody accepts credit card, and what are you going to do with a bank account? So now, sorry.
The likes of M-Pesa moving into the embedded space? I mean, because they're, in Kenya, for example, M-Pesa have done pretty well building payments rails and access to credit. Do you see them opening up APIs to embed their services?
So I'm not an expert on M-Pesa because I'm not operating on an M-Pesa market. So I won't be specific on them, but we operate where we have MTN and where we have a move with Etisalat. And we see all around us all the mobile money. Originally, the mobile money business was not an embedded finance. It was a merchant. You're in the street, you top up money, you get it in the USSD. So I'm not going to go into details. And when we arrived in Africa, we were part of the first company to start using their API, which is good. It means that they've connected all the retail market in the street with all the agents directly to your application. So you can directly top up anywhere in the street in Togo or Benin and say, I want to put $2 into my wallet, and you're using those existing network. So yes, let's say they are part of our embedded finance ecosystem. We're using already what is in place. But I mean, in our specific case, we use them, but themselves, I haven't seen a specific case where it's fully embedded. Except the fact that as a mobile operator in Africa, let's say your telecom experience embed finance. I'm sorry on this since the beginning, because you can make transfer using USSD with your phone peer-to-peer. And that existed for a long time, where you don't need a bank account to send some money from point A to B inside the country.
That's fascinating. So I think one thing I'm just trying to derive the key insights from that you brought to this discussion. One is that we talk a lot about APIs and the infrastructure of embedded finance, but what we are really doing is delivering contextual experiences with analytics, and by being closer to the consumer experience or whatever else they are trying to do while they need some financial service, right? So in terms of what's needed to win in the space isn't so much focusing on, let's get excited about APIs. Sure, we need them. That's one way of delivering the services. Having the infrastructure, sure, that's required, right? But I think at some point this is going to be table stakes. So in terms of winning, I think this is really about understanding the context of the consumer and designing those experiences for an addressable, for a good enough market, for a big enough market where consumers have a clear need, and there is an opportunity to design a 10x or 100x better experience through embedded finance than that's available today, right? So where are the big wins in the world in embedded finance? We saw the Angela Strange example about Lyft and Uber. I'm not quite sure how Uber and Lyft are doing right now. Where are the big wins?
So in our case, and I think I will spoke broadly about the super app. Super app is bringing two things that, and the most important, it provides the repeat engagement. You can have the best wallet in the world, but if I have no reason to come and open it every day, give me a good reason. Mm-hmm. Why you have the Grab and the Gojek and the WeChat is that if you go every day, whatever it is for the reason, but as long as you go every day to open your chat, send a message, book your motorcycle in the morning to go to the office, order delivery for whatever, I would say it's the ecosystem where you're going to open this app every day and potentially transact every day. Okay, who's going to be the winner? Okay, and it's true that on top of this you have your experience. Okay, because you can have another high frequency repeat competitor next to you. So then the experience is going to make a difference. And then I would say that people that don't have the repeat and the experience, they don't have much chance in this battle. And that's what's going to happen to banks soon, because I wouldn't be surprised that in 10 years from now, people in the US will be banking with Walmart and not with Bank of America, because they go to Walmart every day and they have a wallet. And just to make a really quick, simple comparison, I think the repeat and the experience are the two key winners. And this is why we see the rise of the super app. It's coming from Asia. And it's true that 5-7 years ago, people were saying, this model, it doesn't really make sense. And now everybody talk about super app all around the world. And it's true that now in Africa is the big thing, because the super app is even more relevant when your tech ecosystem and your banking ecosystem is not that developed.
So what you're really driving for is the word engagement, right? You're essentially delivering experiences to create greater engagement, not just with the consumer service but also with the financial service at the back end that's being integrated into the experience. I think that's a really powerful message. So who is missing the mark? Where have you seen a lot of money being spent? And that's what we do in Silicon Valley. Sometimes spend a lot of money and not really win or create great things. And sometimes we deliver amazing experiences. So where are the big wins and where are the big failures so far? Not for you, but just in the industry. You have the right to remain silent.
Before answering that question, just jumping back to what Raphael said before, which of course completely agree with. However, what we have seen, what we have seen at Weavr, but also what I've seen previously when I was working in open banking for 5 years, a lot of companies are using or trying to use banking data or banking interaction as a way to drive engagement as well. So, for example, you, Ajit, you mentioned your crypto friends already. You're seeing, for example, a lot of crypto provider, crypto exchange on a lot. Some of them who are starting to issuing debit cards, and I would assume that here, of course, there's a reason. There's a reason to provide this functionality. I'm pretty sure one of the reasons as well is, now we are in these lucky days where the price of crypto, Bitcoin, is going crazy, and there's a lot of attention on the market.
Not just that, the rails are, it's become much safer, and I think the rails for accessing crypto have become much more convenient. Sure. You kind of have this integration into mainstream financial services going on.
Sure. But at the end of it, as a crypto exchange, as a crypto provider, you have here also a chance to have a lot more daily relevance. Previously at Figo, at open banking,
right, more touch points with the consumer,
exactly,
right? Yeah,
exactly. Especially, insurance companies is a good example as well. How often do you want to deal with your insurance companies? But if the insurance company can somehow embed finance into your product offering, there might be another reason to pull that customer into their app.
So there are two topics I want to cover before we go into this, right? So one is buy now, pay later. And Lars, you have seen my Twitter feed, and the other way around, I've seen yours. So we have Ron and Simon who are really excited about this. Oh, buy now, pay later is the next big thing. And sure, it's a big thing. There is Klarna, there is a firm. But then we also see that, there's just all this trouble that's coming because of consumer indebtedness that's being created by you can just get into more debt nicely, right? It's pleasant, but suddenly you wake up and say, oh, where the hell did I spend all this money? So the other thing I realize is that, I already have quite a few accounts. I didn't even know I had quite a big chunk of money in pensions because I worked for 2 companies before and so on. And so I can't even track all my accounts. Now, if I get into embedded finance, how do I know as a consumer how many relationships I have, what my overall financial position looks like, and what sort of risk I'm running? If everybody is providing me a financial service, directly or indirect.
You're using a super app like Raphael's and integrate all your bank accounts and all providers into one app so you can track everything there.
Okay, so unless I go through Rafa, and I go through Jack Ma, I'm kind of in trouble, right? I have to go through one of these 2 guys.
Well, in trouble, it's probably a strong word or strong description. Overall, I think, what are we describing here? We're describing more possibilities.
It's fragmentation of the customer's financial relationships, right? Everywhere. I have 200 accounts now.
It's fragmentation. You are probably also an extreme, and probably a lot of people in the fintech space are just trying a lot of stuff out there. I'm thinking when I'm probably looking at the average user, there are now a lot more providers who are targeting certain consumers. We spoke about it before. Focus on the consumer needs and their problems and provide a solution for them. Obviously, you might have not to use 20 or 30 different bank accounts to be happy. On the other hand, there might be a bank account that is really fitting to your needs, and there's another bank account that's really fitting.
No, but Lars, the point is I don't even know, right? I don't even see the bank anymore. So I just deal with, let's say, Peloton, and then I end up with a Klarna account because I was trying to buy a bike. And then I end up with, a few other accounts because I suddenly got insurance from a third provider, which was embedded in Amazon's experience of buying a bike. And, then I ended up with a loan that I didn't know about. I end up with I don't even know which providers are serving me. And then I end up with a lot of these financial relationships. Some of them involve debt, some of them not. But my financial life is now, being provided by just about so many different financial services providers that it's impossible for me to keep track of all these relationships.
Yeah, but I give you an example. For example, on what you're explaining. Now you have so many wallet coming, and now you have the QR code payment coming all around. And now, right now, as we speak, a lot of QR code payment acceptance network are being developed. Meaning that at the same place where you arrive today and you come with your Visa or your MasterCard, those QR code payment acceptance network going to accept potentially in 5 years from now 1,000 QR code, 1,000 companies like Gozem, like us, and all of them. And at the end, it wouldn't really matter. I'm going to come with my QR code and say, "Oh, I can pay with this." And I'm going to say, "What is it?" "Oh, it's a super app from Korea." The guy doesn't even know. You say, "Okay, no problem," because in my
they just have my data. I don't even know who they are, but that's great.
Exactly. Right. And this is really the vision where I think that at the same time there's going to be a full disruption, and we're going to have a different type of aggregator.
Yeah, so there is an opportunity for aggregators here, right? Somewhere.
No, because today we know something is if you don't open up, you're going to die. Okay, so the more you open,
I agree.
And this is how you're building really fast an ecosystem. So it's not going to be about few acceptors that just take American Express, Visa, and MasterCard and close it. No, it's going to be about people saying, "I accept anyone. You can just plug your API there. And if people come here and they want to buy a croissant, no problem. Just take your app and we accept 1,000 QR code around the world." That's our a bit. I hope answers.
We're getting to something, right? As in there is potentially an opportunity for aggregators, whether those are credit agencies who kind of keep track of all my financial relationships, because there's going to be need to track my financial health. For applications like lending, there's going to be opportunity for people to deliver consumer experiences by saying, "Hey, Ajit, this is your overall financial position. These are all the relationships you ended up with while you were shopping or while you were working." Right. So, and then there is going to be more interesting opportunities in data protection and privacy coming out of all of this, Lars. Right.
Yeah, I mean, on top of that, I mean, we've spoken now about like open banking and PSD2, which is, unfortunately, really limited on a specific type of accounts in a very specific industry. However, there are currently, I mean, there obviously works. I think the Berlin Group has started already on the framework for open finance to extend that scope away from payment accounts to more bank accounts. And also, if you're looking specifically at the trends specifically in India and Australia, who have also their open banking, but it's not open banking. It's more like open everything or open data, which is not just limited to financial data, but also insurance data, telecommunication data, and so much more. And so I think the situation you were describing, where we have a lot more data everywhere, I think we see this kind of concept, and I'm pretty sure that will also come to Europe. There might be maybe a super app or maybe some other providers who are very well suited, who understand the consumer problem very well, be able to aggregate it and provide a nice experience.
So this brings us to the topic that our favorite friend David Butch talks about, right? Identity. So at some point you kind of have to start worrying about what's my unique portable financial identity on the internet that multiple providers can use, and what's the reputation system potentially tied to it. So when we get into all of these embedded relationships across so many different relationships, then at some point I need some sort of a digital identity to tie them together. I mean, do I not? And who's actually solving this? Facebook? Please don't say Facebook.
First of all, Ajit, do you have like a sheet in front of you where you're checking off all the buzzwords in fintech? We have like DMPA.
What do you think I do all day? I'm joking. I'm a podcast host. It's my job to know all the buzzwords.
That's very true. I mean, of course, it's a valid question. I think in that space, who will be not in charge of providing a certain kind of identity? I mean, obviously, this could be. I mean, I think when we look at the different identities or different profiles that we're having online, it's around trust and privacy. I'm guessing everything which is around financial services, which underlies a lot more regulation and oversight from the regulators. People are more willing to trust those providers. So I think there have been discussions in the past of like, why are not banks going into providing like digital identity? I'm not sure.
They're the custodians of data.
Exactly. This might be something. I mean, might not be for every bank very well suited and working out, but generally in the financial service space, it could be maybe an opportunity for some provider, maybe not a bank, but also another provider to do that.
Sure. Right. And I think for all of us, that has been the dream, because the KYC is always a painful experience for everyone. You give your ID, all of this. You want to have one KYC ID, and you can open a bank account in a fraction of a second. We have all your information, and you don't have to do it 50 times, and you just open once this KYC profile, and that's all. But we know there's many startups working on that specific topic, and we look forward for them to succeed, because they're solving a real problem.
A real problem, and it's getting to be a bigger problem. So one more question, right? We are in financial services. We have to talk about regulation. How are regulators responding to this opportunity, right, that's created by embedded finance? Because now they no longer just have to look at, so if I'm a regulator today, I deal with banks, I deal with insurers, I know who I deal with, they're on my list. I don't worry about anyone else. Now, if financial services are increasingly accessed through people who aren't in the business of finance, right? They are embedding financial services into consumer experiences or something else, but they're not, the main line of business is not finance. How are regulators responding to this sort of a bit of a scope creep? I mean, don't they have to start worrying about everybody else, Amazon and whoever else?
I would look at this thing from like two different angles. I mean, of course, firstly, there is the angle of, let's say, creating the regulation, like creating the framework, and that's definitely something which is, I mean, usually always evolving and improving and adjusting to new trends and developments. I mean, now last year we had the Wirecard forward as well that might have some implication as well. I think, of course, this is something that is more or less like always ongoing. On the other hand, I know complying the regulation, like actually enforcing it. I mean, at the end of it, even if there are the tech companies or startups coming up, I mean, if they want to provide the same services as a bank, they have to somehow get this license as well.
Yeah, I mean, who is selling, right? The question is mis-selling, for example. Who's actually offering that financial service to the consumer? Is it the financial services provider, or is it somebody who was embedding the financial service at the point of sale or point of consumer interaction, right? I think it's just a very interesting topic, and I fully appreciate if we don't know yet.
No, but I think from a regulator perspective, nothing is going to change. And at the end, it's maybe not bad. So we need, there's a lot of abuse and we need to be really careful at the end. It's people, it's the
That's
money.
why I love buy now, pay later, right?
Yeah, it's the money of people. But I think what's happening, and that's why I said before, when I said the banks are buying time, is most of them are just saying, oh, you don't have the license, you don't have like all this back office to manage this, so you cannot have access. But I think what we're waiting for now is who's going to be the outsider, the traitor, you can call it like this. At one morning, you're going to say, my bank is for rent. If whoever wants to come, I have 15 API.
I'm betting on Goldman Sachs and JP Morgan. I think Goldman are already doing it.
I have no idea. You can just run my bank and build whatever you want on top of it and compete with all my competitors.
That's going to happen. There's always going to be someone who sees the opportunity and has the technical and the data capability to take advantage of it. That's just...
And at the same time, it's all going to be like, they're going to keep the risk and they're going to keep the relation with the regulator. And then,
or there'll be someone like Steve Jobs who cuts a deal with the financial services industry in the way, Steve did with the music industry, and music industry was playing the same game. We've seen this game in other industries, right? Banks are not going to win it.
Sure, but
that's for sure.
But money is not music. I mean, we've seen
music is money, though. Anyways. It's a lot of money. I mean, gaming is 170 billion. Music is probably bigger. But anyways, you're right. It's more regulated.
No, I mean, the example is Weavr from Facebook. I mean, the idea was genius, but it's just a regulatory issue. That's all.
Yeah, I mean, and if it wasn't Facebook, I guess maybe, there would have been fewer fears in Europe and in the US, but this is just such a big thing. And now in China, we are seeing, Ant Financial go through a bit of a regulatory re-examination and sort of, China trying to take control of how big Ant Financial has become and sort of de-risking. Ant is a great example of how sort of taking the asset side of the financial relationship, but actually offsetting the liability side onto China's credit-bearing banks, credit institutions can be a source of much risk. But let's not worry too much about risk. As you said, the consumer experiences of embedded finance are going to be so compelling because of the context and analytics and of just better tech capability outside in fintechs and in tech companies and e-commerce companies, that it's just going to happen. It's inevitable. Who are going to be the winners, we'll see. But I think focusing on consumer experience is absolutely critical. API, sure, you can resist for a while, but somebody is going to come along and the opportunities are too compelling. So embedded finance, it's a buzzword for a reason. It's a big buzzword for a reason. It's just a force that's driven by consumer experience and is going to happen, right? It's just already happening. So there's just no way around it. On that encouraging note, any last comments, Lars and Raphael, and then we can close the show?
Yeah, I mean, I think, as you said, you summarized it very well. I think embedded finance is, in a way, here to stay. More and more companies will make use of benefiting, integrating financial services, and it's definitely exciting.
It's hugely exciting.
And I think on my side, I think you're going to see the biggest innovation of embedded finance, from my perspective, coming from emerging markets. So mostly Southeast Asia and Africa. This is where I will really keep my eyes. Because of the banking system is not as developed and doesn't have right now the funding and the level of startups you have in London, Berlin, or Silicon Valley. This is where you're going to see and I think mobile money in Africa is one of the best examples.
It's just an incredible success story.
Yeah.
Right. And I mean, there's also a lot more resistance to change, right? I've been in emerging tech and crypto for a long time, and having legacy infrastructure often slows down the speed of change. And you're absolutely right. I think I've seen remarkable things happen in Africa and in Southeast Asia, and now in India with APIs and digital infrastructure being created everywhere, and China, of course, right? So the future is bright for embedded finance, and I strongly encourage all our listeners to learn more about the topic. We'll be talking a lot more about it in future episodes, and I really thank our expert guests, Lars Markhull and Raphael Dana, for appearing on the show today. Thank you so much, gentlemen, for taking your valuable time out to talk to us, and hopefully we'll see you again sometime. Happy New Year.
Thank you, Ajit.
Thanks for having us.
Thank you so much. Have a great day. Cheers.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.